Hi guys, I hope you guys are doing well. Today is Sunday, 5th of November, and we'll be analyzing for the week ahead, starting on Monday, 6th of November. I hope you all saw the match today, or the match is still going on. So I just saw the first innings, and India was India batted really well. I guess 327 we scored, and it was also Virat Kohli's birthday, one of my favorite cricketers, and he had a pretty good knock. Like he hit, I guess 101. Yeah, that is pretty amazing. And on his 35th birthday, he scored like 100. I think that's how we should all celebrate. It was like a really good game for him, and he must be really happy. So yeah, I'm also happy. I really enjoyed watching his 100 on his birthday. It was really inspiring also. So now let me share my screen and let's start our weekly analysis. Yeah, so here is a chart of dollar index, DXY. That's how we call it. So like if you watched my previous videos, I have always started by analyzing dollar index. This is just because this is one of my favorite indicators to know where the market is going. So why? One, there are two reasons behind it. Index tells us where the emerging markets are heading. Like if you know how to read the dollar index, you know where the emerging markets like India is heading. Plus, you know where the emerging asset class, plus you know where the risky asset class like equity is heading. So risky asset classes like equity. So dollar breaking down is generally good. Like lower prices in the dollar index is generally good for the emerging asset classes like equity. Plus it is good for the emerging markets like India. So we have seen in the past week that the market shot up really well. So I'm not saying that it was just because of the dollar index, but looking at the charts of the dollar index, we can say that the market will continue to might continue to go up as this retraces to its 200 moving average. I think it might come down to 104.167, just because this is a very good Fibonacci retracement level for dollar, approx 38% of its rally since July 2023. So I think it might come down to test its 200 daily moving average, and let's see what happens here. And until then, let's go at the charts of S&P 500. So I had already made this channel, so we are still in this channel, and now in the past week we have had a huge rally. Like for like all the 5 days of the week was a good momentum in S&P 500. Also there was same kind of momentum in the Indian markets, but I think now we might come and test these levels, or we might come here till the resistance of the channel, and we might take some resistance here. But I think I have some bigger targets for S&P 500. I'm not being really optimistic about the future here, but if this channel breaks and we do quite well, I expect this target in S&P 500. This is a all-time high target of 4800, and I think we might test this level if we break above the channel. And if we take some resistance here, we might just continue to move in the channel. So that is my view. So if we break out, I think if we break out of this channel, we might watch these levels as the resistance area. These are pretty good resistances if we break out of the channel. But eventually, if we are breaking out of the channel and sustaining, my bigger target as a positional long on S&P 500 will be 4800, just a round number, 4800. Yeah, let's look at the charts of Russell 2000. So this index shows us the small caps 2,000 small cap companies in the US. So I told you guys before that we have broken down, and we were expecting this target of 1591, but these levels did not come. However, we got a good rally on the downside, but the rally did not continue. Now we have given a pullback, and we are retracing and retesting these levels, this support that we had broken down, and we are also currently sitting at a 50-day daily moving average, the blue line that you see coming. So I think if we break above this again in the week ahead, we might continue to see a rally towards 200 moving average, that is approx 1823 levels. So that's my view on the American markets, and I've talked about dollar index. Now let's analyze India. Let's start with Nifty. Yeah. So I believe that Friday had a really good action in the US market. Uh, Dow Jones was up approx 0.66 0.66%. Russell 2000 3% almost, S&P 1% almost. So we had a really good price action in Dow Jones in the American markets and all the index, including Dow Jones, on Friday. As a result of this, Gift Nifty, which is the futures of Nifty, which is actually traded even after our market closes. This is the chart just for your reference. Uh, I just calculated. So after our Friday's closing, approx 3 p.m. here, uh, we are trading above the levels we our markets closed at. We are trading approx 167 points up. So I believe that we are opening gap up on Nifty tomorrow. So we might open a gap up of around 167 points. So this is, yeah, somewhere around here. Yeah. So yeah, we might open gap up around here. Let's see what happens if the gap up fails. Uh, I think if the gap up fails and we come back below, and we come back below the gap up, there is a good opportunity to buy once the gap is filled, or you can pretty much find your own supports and buy, because our global markets tells us that we are kind of bullish, not bullish. We might be trading in a range, but for short term, I think we are in a bullish phase as the dollar index is down, and we are seeing good rallies in the American market. So we might see some resistances here if we are opening gap up here around 19,400 levels. This is also a 200 moving average in 1 hourly time frame. um, and if we break above again, this is a good support, the resistance 19,500 levels. So if we are able to break above this daily 50 moving average, that is 19,450, and this support of 19,500, we might again come up to this channel of channel resistance of 19,800, and that's it. But before we come back above this, I think we might also take a resistance on this trend line somewhere about 19,600, I guess. Yeah, odd. So you guys can copy the drawings that I've made on the channel, and you can on your own charts and do your own analysis. But I'm giving just this reference uh, as I am taking this as a crucial support. But I also have some cutoff levels here. So cutoff levels are that if we again go below this levels, for example 19,200 on Nifty, we are not bullish, then I will not play bullish if we break below the 19,200 level. So this is my cutoff for longs as we are opening gap up tomorrow. If not, a little bit of conservative stop loss can be at 1979 for the downside. But yeah, I'm not aggressively bullish on the market. I just have some key levels here which I'll be playing along with. That's all I want to say is. So again, bank there was a bank Nifty was or has been trading in a channel like I've shown in the previous videos as well. There was some kind of a throw over here. This means throw over simply means that all the bulls were trapped, and then there was some kind of a throw under. So usually when there is a throw over, there is also a throw under. Usually, if you kind to see charts a lot, you will observe, like you will have this observation. This is my observation that usually when you have throwovers, you will have throw unders. So we saw a throwover, we saw a throw under, and then we started to make higher high, higher lows. So now we have again broken above this channel. So until and unless we are above this channel, I won't take any bearish bets. Bearish bets in the sense I won't be aggressively short on the market. You can do some vertical spreads, some sideways spreads for the expiry, but not aggressively short. And we can, if we again break below this channel, or our let's see, our key important, what do you say, moving average, which is daily 200 moving average, which sits at 43,200. We have just broken above this. If you see that the Friday's closing, the Friday's candle, which was a gap up from Thursday, a gap up of almost 300 points, we sustain above this. And now this daily 200 moving average is a very key important area for the people who are bullish. I'll keep my stop loss below this 200 daily moving average, or this is my like short term long positions stop loss, plus my next stop loss will be below the channel. If the price comes again in the channel, I think it will not be a good sign for the bulls, and we might have to exit our longs. But until and unless we are above this 200 moving average, I'll be long on the market. Yeah, the upside targets will be, I guess the first target that I'll be looking at is 43,800. Before that, yeah, and I'll be also looking at then 44,000, which is again a key important level for me, as 50-day moving average stands at this level, the blue line. And then if we also break above this, we can again go back and test the bigger trend line of this ascending trend line, which we had done a fake breakdown of. So if we again break above 44,000, which is a daily moving average, 50-day moving average, I'll see for targets of 44,800 approx, this trend line, this ascending trend line. I'll just clear my charts and show you the ascending trend line. So this is the ascending trend line I'm talking about, the blue line. Yeah. So we might come till here if we break above this. Yeah. So that's my view on the Indian markets. Really, one strong take from this video is that we'll be, so for example, we are currently bullish on the markets. I really want you all to watch out. If you don't play the index, I also usually stay away from the index until and unless there are really amazing opportunities. But yeah, I tend to look at stock specific actions. For example, if the market is bullish now, our view is bullish for the week ahead. Bullish to sideways, not bullish, and not bearish for sure. So we'll be playing stock specific, and we'll be betting on the outperformers. We won't be betting on the underperformers. So the most outperformer sector here in Nifty is CNX Reality. I want you all to have a watch on this index. This index has been outperforming Nifty since a really long time, and it still continues to do so. Look at the massive breakout on a relative strength chart. I would love to see these levels on the charts of these levels are yet to come, and we might continue to rally on this sector, CNX Reality. One of my favorite picks are DLF. DLF, yeah. DLF is one of my favorite picks. Too many drawings here. I'm really sorry about this. I'll just delete all the drawings. Yeah. DLF is one of my favorite picks. It has just broken above its key uh, support area, and think of next target in DLF, which I am betting on, is it's pretty big. I know it's about this 727. So I'm pretty much long on DLF. It has also given us a cup and handle breakout. If anyone knows what is a cup and handle breakout, so I'm also long in equity in DLF. Plus, I'll be long with my future and option vertical spreads in DLF. Yeah. So DLF is one of my picks as it is in the top performing sector. Plus, it is one of the top performing stocks of that sector. So that's how I tend to choose the stocks. So persistent is another of my pick. Uh, so I'm not giving you guys uh, intraday levels for these stocks, but you can look at shorter time frames and take out intraday like support and resistances and play it accordingly. So the long term trend in the stocks, like monthly, weekly charts, are bullish. So in the short term, like 15 minutes, if you're trying to get a dip near 200 moving average or something like that, you can buy it. It is a no brainer buy just because, and you can just keep your stop loss below the 200 moving average, because the thing here is, if these stocks are really bullish in the long term and they are giving you a dip, you can buy the dip to play it short term, or to you can buy the dips to play it, for example, for a longer period. For example, you can add equity in every dip you want. So persistent also looks quite well. It's at all time highs. I have target for persistent around 7,000. So you can look at this chart. Also, you can go back to my videos. In one of the videos, I talked about how to take entries using Fib levels. So you can have a look at that video, because now people might be asking me is that the stock has rallied so much. How do we enter in it? How do we find dips? The stock is not giving dips. I've explained this how to take entries using Fib levels in one of my videos. So you guys can go and watch the video and take your positions accordingly and learn something out of it. Let's just check crude oil. So I tend to check crude oil also a lot, as this also affects our emerging markets like India, as we are a net importer of crude oil. And the increase in the prices of crude oil leads to increase in manufacturing costs in India, and thus increasing the expenses of the companies in India, reducing their profits, hence putting a pressure on their stock prices. Now that the crude oil is down, it has been falling. The companies which import or need crude oil in any form, for example, transport, which is the most basic thing, will tend to do well as their expenses will go down. So yeah, you can put this into market relationships. Now again, so one of the indicators why the markets has been going up is the falling price of crude oil. So crude oil has been falling, equity prices have been going up. This is because the manufacturing cost of the companies have come down drastically, or they're buying crude at a cheaper cost. So I think crude might just fall down till this level at least. This is one of the supports where it might find support, and the next level can be bottom of this channel. So if anyone trades commodities, you can have a look at crude oil, and stop loss can be above this resistance area or Friday's high. So this is how I see global markets. I think unless the crude oil and dollar index is falling, we might continue to see rise or rise in equity prices. I would uh, I would love to come again in midweek this week and give you a guys update on my market view. So what I've planned is I will come twice every week and update you about my market, how I think about the market going forward. Just one last thing. So I also tend to look at this is government bond yields. So in my previous videos, I've also told you about how the government bond yields work. So for example, the bond yields were rallying since Friday 12th May 2023, and there was it shot up like anything. What happened was, what happens usually is, so in this time period our market did not perform really well, just because that, so bonds are usually risk free assets. So on a risk free assets, when you get a risk free return of 5%, the money from the equity market tends to fly into the bond market, and we don't see that kind of returns in equities. So now that the bond yields have retraced, now it is currently sitting at 50-day daily moving average. If it breaks down and goes further below, this means that we are doing quite well, and the equities will continue to go up. Now let's see how the bonds react around its 50-day daily moving average. It has given a closing below it, but let's see. I'm not being really optimistic here, but if we break down, it's really good. But if we continue, if this is a pullback and if we continue to go up, we might again see some pressure on emerging asset classes like equity. So that was all for today, and I hope you guys do well in the weeks coming ahead. And my the levels I've given you, they might also help you to navigate the week ahead, and you guys do really well. Cheers, guys. I will see you guys in the midweek video. Thank you so much. And I'm going back to watch the second innings of India versus South Africa. I hope you guys also enjoy the match. Thank you.